Guys, welcome back to the Independent Investor Channel. My name is Ryan. It's so good to deliver this message to you guys. With the confusion in the stock market right now, it's really confusing as to what it is that you need to be doing. Now, I offer this as a testimonial as to the real moves that I'm making in the stock market right now. The flight to safety that I've just taken within the last couple of hours, to be honest with you. And this will be ensuring that I'm safeguarding a lot of profits that I've been able to manufacture in the short history, and especially over the last 10 years in this historic bull run. This is going to be chronicling my flight to safety. All right. Now, this is not in any attempt to persuade you guys to do something that is ill-advised in your own portfolio. This is strictly just to provide visibility to you guys as far as what I'm doing free of charge. All right. A lot of people will charge you to go into a stock market group to see these portfolio moves. I just don't think there's a whole lot special with it. And if you're paying attention to the volatility right now in the stock market, there's definitely some prudent moves that can be made to make sure that you're geared up for a potential downturn in the stock market. So I'm going to cover the do's and the don'ts. The do's are the category that I'm actually doing right now. All right. And I'm going to kind of chronicle some of the ideas, some of the moves that I've made in the portfolio. I'll be getting a lot more in detail during the live stream. So if you guys are interested in more of the details that I've made, portfolio moves that I've made, I'm going to be doing a little bit more of a deep dive on the Friday live stream. So I just want to invite anybody that's coming by the channel to stop by 9 o'clock Eastern time to catch my 2-hour live stream every Friday. Let's jump right into it. Number one, the bond purchase. All right. I've really cleaned up my ETF bond portfolio in my brokerage account. I've sold off positions in the taxable joint brokerage account, put those positions to cash, and I've cleaned up the ETF portfolio, and I've reevaluated my allocation to short-term, intermediate term, and long-term exposure within my joint brokerage account. Very simple. I've made sure that the exposure limits that I have in there are a little bit more in line with a moderate aggressive investor, okay? I think the time to reevaluate your risk tolerance that I speak about all the time and how important it is to define your risk tolerance. There's nothing that says that you can't recalibrate and check and see if you're an aggressive investor. What is it going to cost you to look at what the allocation for your portfolio should be if you step it back? If you're an aggressive investor like I am, I step it back to moderately aggressive. And if you're a moderately aggressive investor, step it back and take a look at what the allocation recommendations would be for a moderate portfolio or a moderate conservative portfolio, and so on. Okay, take a look. It never ever hurts to understand that as you drop in your allocation strategy, you're going to want to introduce more bond exposure to the portfolio, and that's exactly what I've done here. So we've cleaned up the joint brokerage account. I'll be chronicling and give you guys those for complete transparency. I have no problem doing that. But one thing that I've done here is I've actually, in my attempt to flight to safety, because I do believe with this volatility, I think we're giving a lot of indicators, and I do believe we're going to be entering into a credit crisis later on in 2019, 2020. There's nothing we can do about that. I think it's inevitable, and I think it's really quite scary. I don't mean to scare new investors that are just looking to put starting positions in the market. This is really just an attempt to explain how I'm allocating my wealth in strategic manners in an attempt to put more deleverage risk basically in the portfolio, right? So in my portfolio, I've put a $10,000 block in the intermediate bond fund through Vanguard. Again, I'll be offering that ticker symbol through the live stream. And then in the other Roth IRA account, we've bought a little bit less than that, I think around $8,800, a nice starting block into BND, which is my very favorite through Vanguard, the total bond market ETF that they offer at an expense ratio of 0.035. It just doesn't get any better than that, guys. So we've added a block of positions. So you see how we're employing a defensive strategy by actually reallocating free cash within those accounts, flight to safety, right? So we're reducing our stock exposure or exposure to cash to buying these bond pillars within each of the Roth IRAs, okay? So bond purchase has been one of the things that I've done just here recently within the last day here. Those buy orders are set to go through tomorrow. Another thing that I've done within both portfolios, the joint brokerage, I've left the other two single stock accounts alone through First Trade and through M1, but I've reduced growth, okay? I've reduced and delevered all the growth stocks in the portfolio. I think the one that I have remaining that's a true growth play right now is PayPal. I'm up 10% in PayPal right now. That'll probably get shaved out of the portfolio and we'll be taking profits in PayPal, but reducing growth. Why do I mention that? For you guys that are wondering about my flight to safety video and kind of wondering what it means to you, I think if you're not exposed to some of these growth names, I think the real takeaway is to hear me out on starting new positions in growth names right now. I think you're playing with fire a little bit. So just be kind of careful. If the portfolio calls for that type of activity, so be it, okay? But just make sure that you're doing so with an acknowledgement to the current condition of the market. And I'm just as confused about anybody who's looking to make sense of what's going on right now. I really think we're kind of getting at a tipping point here with the China trade talks, the tariff, the trade war, etc. I really think that's kind of spurred a little bit of volatility in the market, but I think the underlying threat to the market right now is the credit crisis, all right? What do I mean by prepare dividends? What I want you to do is look at your portfolio, take a hard look. If you have the passive ETFs, total market ETFs, you're good to go. You can hold those positions, all right? I'm going to talk about in step 4 here what you can do with the passive ETFs. But prepare dividends. Make sure that you're dividend reinvesting, making sure that you're earmarking each one of your dividend holders and really asking yourself, look, I entered into this for dividend income. Those really should be those companies that perform well during your market downturns, your Waste Management, your Walmart, okay, your Johnson & Johnson, companies like that that really do stand the test of time no matter what the market does. And that's just asking you to prepare those dividend stocks and really prepare yourself to understand that those quality stocks are as good as they're going to get to enter into a downturn and to get mentally prepared to take those good assets into a potential downturn, maybe even with the potential of adding to them if the market really becomes oversold and undervalued. All right. Number 4 is throttle back on contributions. I can't tell you how many times I talk to people who get stuck in a rut with their funding schedule. It's amazing. They're full funding every single month. There's nothing wrong with throttling back on those. If you're funding an employer-sponsored 401k retirement plan and you're killing yourself to fund that up, do not hesitate. Now is the time that if you want to downshift a little bit, or if you want to take your foot off the accelerator, you can do that, all right? And you're okay to do that. And you're okay and justified in doing so, all right? Maybe you can free some of that cash flow to make the budget a little bit more expanded, make things a little bit easier for you, maybe put some of that free cash to the side a little bit. And that brings me to your build cash. I stress this all the time. Now's the time that you want to be building cash, all right? If we enter into a bear market and ultimately a recession, which I do believe is inevitable in our short future, whether it be in the next 1 or 2 years, and I think the credit crisis is going to be the very trigger that does just that. I believe the real estate market will be close to, if not correlated with, the downturn in equities as well. All right, Building cash is not something you necessarily want to do during a recession. Now is the time you want to start to build that cash so you are ready to take advantage of the downturn, guys. So this is exactly what I'm doing. This is what I meant by flight to safety, all right? I'm giving you this insight right now when nobody else is talking about it. I will be first to the game on YouTube to enter this on the ledger, man, for people who follow me and understand kind of what I'm thinking and the actual moves that I'm making in my portfolio because of the recent volatility in the stock market, in preparing my portfolio to take into a downturn and profit from it. And I just want to premise the don't on the right side here, some of the don'ts that I really don't want you to misconstrue what I'm doing over here, which I perceive to be strong moves in the stock market, okay? That's the difference. This is strong, this is weak, okay? So over here, I don't want you guys to panic. We do not want to panic. I don't want you to watch this video and say, oh my goodness, Ryan's forecasting a recession. I could be completely wrong, okay? I could be completely wrong. I don't believe that I am, all right? I think this is inevitable in the short to medium term. I just think we're due. I think we're overdue, quite frankly. But I don't mean to scare investors out there. If you're sitting on $2,500 and you've just started investing, stay invested, okay? Maybe you want to deploy one of these strategies like a build cash, okay? If you do that, you'll be wiser and the better for it. You really will. But the last thing I want you guys to do is listen to my message and go sell everything tomorrow. That's not the message that we're putting through. Number two, I don't want you to be overexposed at this particular juncture, all right? Please do not continue to keep your foot on the accelerator and drive this stock market right into a 20% bear market to enter into a recession and then come back to me and say, this is the worst thing that's ever happened to me. I hate being an investor. Why did I do this? Look at your exposure rate right now. And if you need to recalibrate, now is the time to do it, because my community is going to see a different side of me when the recession does hit. I'm going to give you a whole different side of the dark side of the moon analogy when the stock market turns south on us, okay? You're going to hear a lot different buy posture. You're going to hear a lot of discipline talk, a lot of patience. Those are all the strategies that we deploy, that of which we cannot really talk about now when the market is at its current levels, okay? So assess your exposure limit right now and make sure that you can answer this question for yourself. Are you overexposed to the market now? If you are, go ahead and make the moves that you need to calibrate your accounts to more of an acceptable comfort level, not only now, but in anticipation of a potential downturn in the stock market, okay? We do not want to underestimate the power of how long the stock market has run and how quickly it can rubber band on us, okay? We have been on a historic market, okay? We have been on a historic bull run, and I really do fear that the rubber band effect is going to be violent when things are not rosy anymore. All right, I really think that there's going to be all the excuses in the world to drive this market down, and it is going to test the most savvy investors. So if you guys are out there and you're a new investor, I don't mean to scare you into panic mode, but what we want to do is take a nice, calculated, conscious, objective look at your portfolio and make sure that we are not underestimating the power of the stock market, both to the upside and also to the downside, okay? What is fair in love and war is also fair in the stock market, and there are no guarantees in the stock market, okay? And finally, I do not want you to attempt to time this market. Don't move to the side in cash. There's nothing that I said here that would make you think that I'm trying to time the market. I'm actually making buy purchases here with my accessible cash on the side. I'm building cash in the cash pillar on the side of the portfolio or as an aspect of the portfolio. But the last thing I want to see you guys do is try to put cash on the side and sit there and hope for that 40% downturn overnight. I'm here to tell you that that is going to be a big mistake, and it's not going to happen the way that you perceive it to happen. Guys, I hope you enjoyed this version of the do's and the don'ts and how I've exercised my flight to safety here at the end of May. I really do think that May of 2019 is probably that tipping point where we need to start recalibrating, not underestimating, and rechecking our exposure level to the stock market, guys, in an attempt to potentially take our stock market portfolios into a downturn, and more importantly, profit from it. Remember, it is a money game. The bottom line is always making strong moves in the stock market with an attempt to make money. Guys, thank you so much for tuning in. Subscribe to the channel if you enjoy the message. Leave your comments at the bottom of the video. Share the message with new investors. Man, they gotta hear this stuff. It is absolutely critical that new investors get this information as quickly as they can in their hand. Share the message. You are my eyes and my ears, guys, to sharing the message to the Independent Investor channel. I cannot do it without you. Guys, thank you so much for tuning in, and good luck in your investment future.